Hi traders, hope you are having a wonderful weekend. I thought I'd just do some quick coaching sessions because there's lots of questions coming in regarding the gold on steroids system. And I think quite often I'm using the 30-minute and the 5-minute, but what I would like you to consider maybe is using three charts like this. This is the 30-minute on top, and this is the 15-minute on the right, and this is the 5-minute on the left. And what you're looking to do very simply is first of all discover the direction, and as you can see on the top there is a red background and an order block which is in red, and there is a high liquidity zone here, which means basically there's a few stops up there. The stop hunters will be taking this out, and there's usually a liquidity grab, as we call it, and the price goes down accordingly. Now if you are like me, I put my order here at 26.72 with a nice tight stop. Then I have the price going down to another order block down below. However, if you are not doing that, then you can use these three charts to line up the trade if you have the time, which is great, doesn't take long. And one of the things that we're looking for quite often within the trade is outside bars. So this is an outside bar here on the bottom right. Excuse me. And as we can see, once the price comes outside the channel, this channel here on the bottom right, we can see that it's like a fish out of water is the only way I can explain it really, and it can't last long. Of course it can if there's a strong trend, but clearly there's a downward momentum here. I've got my grandchildren around, so if you hear kids screaming, then that'll be them. But yeah, so outside bars are really important. And if you then get an outside bar like this in a downtrend, then that's a big clue that the price is going to continue down. So this is a lovely retracement, by the way. The other thing to look out for, look on the left, bottom left, on the 5-minute chart, when you get a big, fat, juicy sell signal. Now this might not seem a lot, but if you didn't get in at the very top, that's fine. What you can do is get in on the break on the 5-minute chart. And down to that support line is 217 pips. Okay, so being late to the party is not always a bad thing. All right, so don't feel like you have to get it perfect. Don't feel like you have to get exactly on the point. That takes time and confidence in what you're doing. But this is a fantastic way to build your gold trading journey, build up your trading account so that you can be successful. Now, in the same way, I want to talk about Forex. And so let's have a look at that as an example. Let's move my big ugly head out the way. And this is as an example, quick example of the pound Canadian, which is parabolic to the upside. And we can quickly check that on the daily chart. Are all the buyers in? Yes. Is there high volume? Yes. That's all you need to know. All right. This is a daily chart, so it won't change very quickly indeed. So have a look on the bottom left. I've now got the 4-hour, which is the parabolic trend. And you can quickly and easily just move your stop with this green line, and happy days, you bank 300 or 400 pips. That's a simple way to do it, isn't it? However, there is another way you can use this information by using the three charts that I've got here. So I've got the daily at the top, I've got the bottom left as a 4-hour chart, and I've got the 15-minute chart here on the right. And you can probably know exactly what I'm going to say. And what you're looking for is change of character. So the price cycle within this system is really important. I often talk about that. So the price cycle on the pound Canadian this time is the price is falling down, holding on to market structure, achieving higher highs and lower lows. And we have a very low oscillator on the very strong support line. So at this point here, while the price is moving down and red on the 15-minute chart, you're just waiting for the price to change character and go green. Once it goes green, you can have a lovely day trade. The other thing to bear in mind is, where is your target? Your target is, look to your left, you can see it 18070. Okay, so you know this information before the price is actually moved. So once you have that as a day trader, if that's what you want to be, then just wait for that change of character to go green, and you're going to have a fantastic risk to reward as well, by the way. Let's move that out of the way. And so you're going to get in somewhere here, let's say, and you're going to have a lovely tight stop of 39 pips, and your target's going to be 180, what did we say? About there, let's say, to that top of that previous high on the left. So as a day trade, this might only be worth 85 pips, but look at the risk to reward 2 times. In fact, you could have had it a little bit tighter there. In actual fact, for me, the stop needs to be actually a bit tighter than that. You could have a 24 pip stop if you wish. I don't want this to move into consolidation. I want the price to stay in that trend on the short term time frame, a 15-minute chart. So in actual fact, it's worth 3.61. So you're risking 1% to make 3.6 or 2% to make 7.2%. So a fantastic way to use the advanced pro charts, to use the price action charts that you already have. If you don't have them, links are below. Up to you. I'm not bothered. I make no money in the markets. And so you can be a swing trader, you can be a day trader, you can be a gold trader, a complete Forex trader. You can be a position trader with all these information and all these charts, which are fantastic. I've used them for many years. And if you have any questions, please let me know. Have a great weekend.